Why am I not surprised? A freeze on rentals being proposed? Well, today we're going to tackle and look into this big issue, especially that's going to have a massive impact on investors. We're going to see the proposed changes. We're going to have a look at where in the world other countries are actually doing this, and also the second and third order consequences that might result in these changes. We can see the Greens are arguing to freeze rents and saying it's a no-brainer for the Albanese government. The federal Greens are pressuring the Albanese government to tackle the national rental affordability crisis and proposing that rental increases should freeze for the next 2 years, and then after that, a maximum increase of 2%. You heard it right. They're saying that rents should not move or change for the next 2 years, 0% increases for the next 2 years. Plus, after that, they're going to try and limit the amount investors can increase their rents by. Absolutely ridiculous, crazy sort of proposal that we're seeing here. And they're doing this off the back of new research. There's been new research that's come out and said that there's been severe stress for low income earners facing higher rental expenses, spending more than 50% of their income on somewhere to live. Now, if we look at the breakdown of households who are renting, we can see it's really the under 35s demographic being a high proportion of renters, with 60% of them being renters. So we can see this demographic would tend to be at the start of their careers lower income earners, and by virtue of that, we can see a greater percentage of their household income goes towards housing. So looking at renters, for example, a lone person, 36% of their income goes towards rent, as opposed to someone that's got a mortgage who typically is probably a little bit later in their career, has a higher income. Nonetheless, it has been proposed by the Greens, and they're saying that rents across the nation have rapidly risen at the fastest rate they have in 14 years by 9.1% across all capital cities and 10.8% across regional areas. Now, this is also coinciding with rate rises. Whilst rates rises have increased, mortgage repayments have also increased for investor, which has been passed on to renters. Now, when we look at statistical data, there's almost a perfect storm. So the government's trying to intervene with issues that are rising towards rent. But why don't we take a look back? Let's look back 7 years ago when the government put in regulatory requirements to limit the amount of investor loans that were written by the banks. And by virtue of this limitation, reduce the amount of supply. And now we've got a supply issue because demand is far greater than supply. So in 2015, the banks were limited that they weren't able to grow their investor numbers by more than 10% of their book growth. In 2017, they limited interest-only lending, and then in 2018 they started to remove some of these growth. So for 3 years, the banks could only increase their investment numbers by 10%. That was removed in 2018, and in 2019 they allowed interest-only buffers to come back in. So we can see this has a massive effect. These are the second and third order consequences that we need to think about when we make changes like this that could potentially eventuate in the future. We're going to talk about some of them with these changes that are being proposed and what actually might happen as a result of implementing such a very strict policy on investors that are in effectively the market, not only to make money, but not to be losing vast quantities because they can't increase rent to cover costs such as interest rate hikes. Now, the Greens Party is proposing to look at this as a national approach, and that once again, as we talked about earlier, to limit increases in rent up to 2% for every 24 months, and having tougher restrictions on no grounds for eviction, expanding tenant rights, and minimum standards for rental properties. Some of these make sense, but limiting the amount rents can increase in a free market is very dangerous. So as we can see here, the Queensland Member for Parliament, Max, is the one proposing these changes. We can have a look at why some of these rental issues are in place. So we talked about some of the regulatory things that changed in 2015 up until 2019. And we can also see dwelling approvals were down. So in Queensland, as an example, we can see on average, since really 2015, the number of approvals for dwellings has been well under the average for the last 10 years. We can also see vacancy rates have been plummeting at the same time. And this coupled with the fact that there's real options for investors through Airbnb and short-term accommodation, and even some places that will do student accommodation. Now let's think about the second and third order consequences of these changes. Let's say they do come into place. Well, some investors will actually shift their property from long-term accommodation to short-term accommodation. And we've been seeing this happen in regional towns where home holiday listings have jumped up and rental scarcity is becoming more of a thing. Now, the number of properties listed on Airbnb have skyrocketed from pre-pandemic levels, and dozens of regional councils are actually finding that there's a rental crisis because these properties that were previously on long-term leases are now being letted out on a short-term basis. And just looking at areas such as here in New South Wales, there's been up to 100% increase in some areas, in some shires, of short-term accommodation. You freeze rents, you're going to find a lot of investors are going to look for alternative avenues where they don't have to play by the same rules and get a decent return on investment. After all, these people are investors. They've entered the market previously on the presumption that they can get a certain level of return on that investment. And limiting that with a freeze is really counterintuitive to a whole free market. Rather than freezing rents, the government needs to look at home ownership statistics. We can see here a large portion of the population in their 60s and 70s own property. 80% of them own property. And in a vast majority of the cases, these homes are far too big for their requirements. There might be one or two people living in a 5 or 6 bedroom home, but actually having no real use of the available bedroom. We saw the government trying to incentivize those over 65 years old by being able to make a superannuation contribution of up to $300,000 if they sold their existing family home. But it feels that this isn't enough. There probably needs to be a lot more done in this space because there's a lot of properties that are underutilized. There's one or two people living in it, and it is the older demographic, as we can see here, holding the majority of homes across Australia, and doing something here could relieve that supply issue shortage. The other thing that could be looked at is increasing the number of dwelling approvals. We know there is issues with builds at the moment, so it's something that needs to be looked at. And we need to keep in mind with any government changes such as freezing rent, there's always going to be second and third order consequences that might not have been thought about at time of making the change. We really need to look at the home builder grant and how that government stimulus to get builders through COVID has actually had dire consequences for many building companies that are collapsing. We see here in Queensland, a building company, Oracle, went into liquidation recently, and in 1 year they quadrupled the amount of home builds that they were doing. So they went from 76 homes in FY 2020 up to 316 homes in FY 2021. That is a massive increase on work. They went from $22 million in revenue each year up to $90 million. And that spelt disaster for these guys because as they were locked into these fixed price building contracts, when the costs skyrocketed, they weren't able to manage their expenses and ultimately went under due to this increased demand and unexpected supply shortages. Once again, unintended consequences from government schemes. And we might see the same with rental freezes and maybe a disincentive for those to purchase investment properties and move their cash and capital elsewhere into other markets. We can see in New York City, they had a similar program which almost sounds identical to the one the Greens are proposing. They had tax credits for those that were participating in it. It was a program that allowed those that were on low incomes, disability, or of a certain age to opt in, and effectively they could freeze their rent and pay the same rent for the next 20 years. They had 1 and 2 year lease renewals that allowed you to lock in your rental increases at either 0% or 2%, and it was available for 1.6 million New Yorkers and was put in place for rental stabilization. And it was for people at least 62 years or older, or someone with a disability, or those that earned less than $50,000 per year.